Perfect. So, Ivan, that's all the time we've got. We got to kick you off because we got our next show host coming in. So, you got to get out of here. So sorry, but we no longer want you. I'm just kidding. We love Ivan. We love having you on. And I just want to mention to everybody watching, if you have not already, make sure to go subscribe to Ivan on YouTube. He has his own channel. You can find more value there. And you can also reach out to him if you're interested in one-on-one coaching. That is something that he offers. You can also find him in our Discord server. If you're a member of our Discord room, you can send him a direct message, ask him about coaching that he offers, and get some value with him there. Ivan, thank you very much for coming on, man.
Thank you very much for having me.
All right. See ya. Okay, guys, up next, Chris Pulver. I'm going to say hey to him just after this quick break. Before we do that, let me just mention, if you are not already using the Edge Finder, it is officially back. You can currently apply for a 30-day trial. If that is something that you're interested in getting more information about, we'll drop the link here in the chat. I did mention this earlier, but gold and silver are getting bullish readings on the Edge Finder. I really like that confirmation. I'm going to stay long unless momentum breaks, but I just wanted to encourage anybody who would like to try out our software. Click the link here. You can apply for a 30-day trial using that link. Fill out the application. It takes just a minute or so, and we'll reach out to you with some information about how you can set that up. Okay, guys, quick break, and then up next, I'll be joined by Chris Pulver here to talk little markets.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
All right. Hey, Chris, how's it going, man?
What's up, Nick? Happy President's Day.
Yeah, you as well. Question for you, Chris. Well, we haven't spoken in a while, so I want to get your thoughts on a few things. I figured I would chat with you about it. First of all, stock market's back to the all-time highs. How do you feel about this? Are we had some hot inflation data. I listened in to some of your segments last week. You were talking about the 10-year yield, how that could be a threat to markets if we take out those highs. And to follow up on that question, if you're not so interested in indices, which I'm kind of going to assume, if you're not, what are you looking at?
Well, I am interested in indices because I think that's the low volatility play this year, is to generate the income on the indexes. I wish the Russell was set up a little bit better than what it is, but the Dow is, sitting here with this like last little bit. Maybe this is another kind of coiling towards another blow off top. My concern is just the sheer bar count that we have on the Dow and the S&P, and the move away. So have a look at the DIA. Last time we hit the 200 moving average on the daily was 320 bars ago.
Wow.
Last time we had the market also this high away of about 9.7%, almost 10%, was the previous all-time high. I don't think it was an accident that we came back down. So I could see this type of setup happening. Timing-wise is going to be the most difficult, but let's say the Dow runs up to the highs and pokes the highs and then falls just a range. I don't know. This is the thing. I don't know what causes that. What causes that? I have no idea, right? The S&P, same thing. The S&P has not hit this daily charts 200 moving average since November of 2023. Again, another 300 plus bars. We're sitting around 322 bars, very similar to the Dow. It's kind of the same thing. I mean, the last time we had a big stretch away move, this was pretty notable. When we had the July to August sell-off, we were up around 10 to 11% above the 200 moving average, and we end up having that, really nasty fall over that like 30-day window. Similar to what we're staring at right now, we've had another 9 to 10%, and we started to correct. Now, we have seen the 200 moving average has come up just based on price alone, and price hasn't really gone down nor up. And so the 200 moving average, as it is dynamic and gets closer to price, we are getting a lesser distance away, but the bar count grows. So I'm not saying that I am
bearish. I just think that either this has a fake out to the upside and we come back down into this range, or we have a slight move to the upside where it's going to be a bit of a broadening top.
Yep.
So you see what I'm saying? Like we could
Yeah.
come up here towards like 620 or so, and then maybe pull back in with this previous resistance becoming support. I just it's hard for me to judge. Oh, it's hard for me to think we're going to have sustainable blow off tops.
I think that's what, when I set you up that way, I wasn't saying that, oh, I know you're bearish. What I meant more was,
Yeah.
I think we're in the same camp of just saying, look, markets don't move up forever, and we've corrected sideways a bit for a ways, as you just mentioned, with the dynamic kind of nature of the moving average kind of bridging the gap slowly. So we're correcting sideways a little bit. I guess you could make the argument. That is one of my favorite expressions. I think it's kind of hilarious, correcting sideways. Like we're just kind of staying in place,
Sure.
we're running in place and giving the market some time to just kind of digest. But what I also kind of was hinting at too is that, you mentioned the Dow Jones. You also, I know, are big on gold and silver and Bitcoin. You're more diversified, and I think that diversification here is also a stance, right? It's not necessarily bearish, but it's saying, look, we've had some runs here, and Chris, sometimes we sound like broken records saying that. We've gone sideways. The market's waiting to really pull back, but it will happen. As you mentioned, that August move was violent and quick, and if you were prepared, I know you and I discussed, we both made some mistakes during that time, but came out okay, right? So so that's what I think is interesting here. You have some stuff that's happening under the hood worth talking about that I want to ask you about. Foreign stocks doing quite well. You've got the DAX running crazy. You've got Chinese stocks. Oh my gosh, I know you're a Chinese stock bull. I wish I kept more of my positioning in that because it's looking incredible. And you've got gold running away with it. So I'm curious your thoughts on there. What excites you outside of stock indices right now?
I mean, the fact that we've had pretty much all other countries outperforming the U.S. to start out 2025 has been an interesting month and a half.
Yeah.
The Chinese stocks have been outperforming, index is outperforming. I think China is coming back in a pretty big way. This week we have Alibaba and Baidu earnings, so we'll see if there is justification. But again, you look at a stock that makes a move like this, it's hard to think like this is the new normal.
Yeah.
I mean, any stock that is this type of rate of change this aggressively, we're probably going to deal with a lot more volatility ahead. But I'm trying not to cap my upside too severely. Like Alibaba, I've got positions here at 85 and 99, got a bunch of option trades and ratio spreads. Baidu, this one I ended up might getting called away, unfortunately, because I was able to roll this up to like 105 and 110. But if we have a similar rate of change on Baidu, where we get back to these highs from September, there's probably not a way that I can bump this up to like 116 without like chasing behind it or going out so like obnoxiously far out on the expiration calendar. It probably won't be worth it. So I might just take another small dollar cost average position when the market opens up on Tuesday, buy a little bit more Baidu. I understand there's earnings though. I mean, that's the one thing I would have to take in stride is if earnings is a positive thing, then we probably have another run right up towards the 116 handle. What I might be willing to do is just throw on another credit spread, and if it goes up, it goes up. Generate the income there. Obviously, I make a lot more money if I just bought more shares. But I mean, I guess it's a good problem to have. Like, oh boy, my stock got called away, boo-hoo. But it's I've owned the thing with a break even in the low 80s. So I mean, to go up into the 105, 110 handle, that's still getting it called away for a good chunk of profit. So that is Baidu. I mean, Germany has been insane.
Yeah.
I mean, outperforming like dramatically. I think from the start of the year, this thing's up like 13 to 15%.
I think it's 14 and a half. We
is it really?
calculated
Yeah, okay.
somewhere around there, 14. So
okay. So when we started trading in January, you've got month plus right here. There's your open. Yeah, 14. It's like we've got the S&P up 4%. So couple of things. I mean, we talked about this quite a bit as we wrapped up last year, like what's going to be the big prediction for 2025. We had said either one, this kind of U.S. exceptionalism is going to be hard to continue and sustain. So it's not a huge surprise that other countries that look a little bit more attractive are seeing more inflows. And on top of that, I do think what's happening with U.S. policy right now is forcing money to go into
what's likely going to cause other countries to take fiscal policy action. Look at what happened to the U.S. the last 4 years. Everyone's talking about the Fed's more restrictive, and the Fed went from like this crazy aggressive rate hike policy to then, obviously everyone's, hating on the Fed for what they did last year by cutting rates 100 basis points. But at the same time, what's been the common underlier for the U.S. has been fiscal spending. And it almost looks like right now, money is going towards the countries that would benefit from fiscal spending. And it's happening more in Europe. It's happening more in China. Japan's been the only one that's been crap. Like Japan's sideways, right?
Yep.
And I don't know what that means necessarily. I still think the dollar is an interesting play for this year. Let's go to a smaller time frame. But I mean, the monthly, I still think the dollar has a pretty strong support level around this 106 to 105 handle. If this is it, though, like if this dollar does not hold at 105 and this thing comes all the way back down, I could see the stock market, Nick, going to all-time highs with some momentum. Like, my big concern for 2025 was that the dollar gets stronger and the 10-year yields rally, and they go kind of hand in hand. That's going to put a chokehold on growth. And yet, if the dollar gets weaker and the 10-year yield goes with it, I can see the market is looking at like there's more money to be made in equities because all of a sudden yields are down, bonds are up. Like the appreciation of bond prices is one thing, but the yields going down just makes like fixed income a little bit less attractive.
Yep. No, that makes sense. It can reverse course, right? That relative attractiveness of bonds can erode away if you get the weakness in the dollar. Yeah, no, dollar's been interesting. I mean, you've had a little bit of a crack in momentum, I suppose, from the recent kind of undefeated uptrend. It's a different price action chart than it was, a few weeks ago. So we'll see. I mean, there's a lot of beneficiaries if you do get a weaker dollar. Bringing me to metals. Gold's been running up like crazy. This has been a really strong move so far this year. I mean, this too, yet again, everybody kind of forgets about gold. It's up, it's not up as much as the stock market, down 3.8%. But at one point here, let me see if I'm getting this right. At one point you were up about 5%. So I don't know, silver and gold, do you think they have a lot of upside this year, or do you think, they'll have more of a consolidation type or even down year?
I don't know. I think that the simple thing is, look, I've got bar counts on the S&P, bar counts on the Dow, bar counts on gold. I think you can't get too excited when we've had a bar count that starts here, still goes, it's 300 plus bars. And also this last little run since we blew through these highs, this is up like 14%. That little stretch from December to now is up like 14%. Once we blew the highs off, I just think that 3,000 could be the psychological number. Maybe it struggles to get there. Maybe it pulls back before it gets there. But there's something about a consolidation window, I think, based on the time of this. Either we consolidate before, I don't know, either we keep moving to hit a psychological number and then we have like a nasty snapback, or we consolidate and pull back to find some type of dynamic support before we head up. And again, I would be shocked to go another like 50 to 100 days without finding this 200 moving average. And that's what I think about a lot of stocks. I mean, if there's stocks that have bar counts of 300, 400 plus bars, I don't think that stock has a ton of directional play without finding some dynamic support. Like I said, the only thing I'm missing is like the why. Like, why would it pull back? Why would the SPY pull back and find the 200 moving average? Why would gold pull back and find the 200 moving average? Why would Meta? I mean, Meta has had another crazy high bar count. This one, it goes even further. This one is another one that is now 500 bars away. And if you remember not too long ago last year on NDVA, the other stock that nobody trades, NVIDIA, that I looked at this bar count and I said, we're probably going to find a 200 moving average. And I said that once we hit this high and retested it, I was like, look, we've still gone 400 plus bars. I thought as we made this high, I kind of made a statement like, we're probably going to see the 200 moving average before we hit all-time highs. And we faked out like to the exact point of that all-time high, and then we dropped and had DeepSeek news and everything else. But ultimately, we did have a why. Call it DeepSeek, but this technically did what I expected, which was we were 400 plus bars overextended in a way and kind of imbalanced, and yet price pretty much stayed within that range, found the 200, and that was a perfect spot to buy it. I mean, if anybody was even paying attention to NVIDIA, buying this thing at 120, 119, 118, whatever price you can get, you love that trade. When this thing came down to the 200, I did ratio spreads, I sold puts, I bought some shares, and I also did some debit spreads, and I'm
Mhm.
closing profit on a lot of those right now. So
I
it's
did
just
I did
it's
the same
waiting,
thing, Chris. I mean, I did a
Yeah.
little simpler for more options, beginner friendly style, but I sold a whole bunch. I sold 2 different puts, 2 different levels, closed one of them out, and I've got one still running that I'm looking to close. I've got shares that I own and covered calls. I got fancy with NVIDIA. That's pretty fancy for
Listen to
me.
you. Yeah.
Yeah, covered
Sounds
calls,
fancy.
naked puts at the same time. So, no, I like the thesis there, right? When you get this really long stretch, whether it be stocks, gold, doesn't matter. Just keep it so silly simple,
Yep.
and just think like when something has run really hot for a very, very, very long time, it doesn't take much to kind of disrupt that and very quickly a return to normalcy. I mean, we saw that big August 5th sell-off, and no, it didn't turn into, a stock market crash, but look how quickly it reversed down. This was, I think it was a 16 or 17% move on the Nasdaq in just a few weeks. So I agree. Like the concept of like trying to, I know what's going to cause the Nasdaq to drop again like that. I'm not going to try and claim I know that. Could be a number of things. Could be
Sure.
tariff negotiations sour. It could be inflation someday. Like we maybe I could see the market doing what it did with DeepSeek, where DeepSeek came out in on Christmas Day, I believe, and it took a couple weeks before the market panicked about it. Like I think inflation could do something similar. Like inflation's in the threes. Oh, who cares? And then one day everybody's like, inflation's in the threes. That's the way
Right.
markets work. They can be very erratic and sometimes just switch their attention drastically. So I would not be surprised if something comes out with the Fed. That's what we saw that big sell off when we were on stream together, Chris. It was like the Fed just signaled a pause, right? They just signaled a pause, and that was enough to get the market to drop in that circumstance by 4% in a day for the Nasdaq. Proceeded to go peak to trough, a 7% pullback. Nothing huge, but for the Nasdaq, that's something. So I think that being patient here this year is wise, because in the last 2 years, Chris, here's something I think a lot of people have learned. A lot of people have learned in the last 2 years, don't be patient, just buy. And that mentality has actually worked phenomenally in the last few years with equities.
Dude, it's
But
worked great for the last 6 years. It's worked fantastically well.
yeah, and it won't always. Like it does when it does, and then it won't always. And people who are patient will, I think, get rewarded in the end. Because here's the other thing: if you get rewarded doing that, what happens is okay, I'm going to do it again, but this time I'm going to do it with more leverage. I'm going to do it bigger, and then the day it breaks, you lose everything.
Yeah, the biggest concern is the day that the Fed can't backstop the market and actually have it show the signs of a bottom.
Yeah,
That's the biggest concern, is like, let's say, and again, I don't know what that's the thing is, like, I don't know what the catalyst is. I do wonder if, this year it's like everyone is so bullish on the market. That's the one thing that's kind of weird, is we went from climbing the wall of worry all of last year into like post-election, everybody's bullish,
Mhm.
most exposure from households in equities, pretty much on record. Financial managers and like the Bank of America management survey showing like most managers are like crazy exposed and like 60 to 70% bullish. Oh man, I just heard this crazy statistic over the weekend. It was something like, um, I don't know if it was like a traders conference or like a financial advisors conference, but basically going into 2024, only like 8 to 10% of this group said that we were going to have a positive year in stocks, and we obviously had a good year in 2024. Well, this turnaround, it's like 60% of that group is saying we're going to have a great year in stocks. And so like the sentiment is just like almost pinned
Mhm.
bullish. And I'm a little alert, like I'm a little concerned by that. And the one thing going into this last week, I'm curious how this prints, but I totally missed this as and I wouldn't say I missed it, because there's nothing about what, a 4% correction. Like,
Mhm.
there's nothing about this to me, Nick, that says, okay, we poke the all-time highs, we pull back about 3%. And there's nothing about this that shows a 3% pullback attached with an AAII sentiment survey that says this is the bottom.
Yep.
Right? Like if we were down, 10% again or 15% again, then sure, I can get a little bit more of that contrarian indicator to say like this is more of a good indication of a bottom. I mean,
totally agree.
Yeah, like when we talked about this area when everything was down, and what did I keep looking at? How many stocks are below the 50 period moving average?
Yep.
Right, or how many stocks are above the 50 period? It was down to like only 10 or to 12% were above the 50 moving average, and like historically, that's been a really good indication of a buying opportunity, and it was. So that was a good buying opportunity, and we also had like a nice healthy correction. This was down. I mean, the S&P at the very end of the year had about a 7% correction or so. 5.5%. I think the Nasdaq was 6 or 7%. So 5.5% correction. My point is this. I mean, this was a 3% correction, and we had like the 12-month high in bearish sentiment. And I'm like, that just seems a little extreme to call that a bottom. And it's like, so is the market buying on like it's the pain trade.
Yeah.
Make everyone think that everyone that's bearish right now is just going to get hammered by. You got to get bullish because we're going to rip to all-time highs. And again, even two higher inflation readings like CPI and PPI, they weren't just like mildly hot. Like they were freaking, like they were scorching inflation. But then I was reading like, well, this might mean a lower PCE. I'm like, I don't know how the hell that math works. How you can have higher CPI, higher PPI, and then expect the end of the month that like PCs is going to be crazy low. I don't get it. But
Chris,
it's not enough, man. It's not enough to break the market.
Yeah, I mean, that's the thing is you mentioned that, and I love that point that you made just about the AAII investor sentiment survey here. I've got it pulled up as well. I don't know why, I just prefer it in a vertical form, but
yeah,
the bearishness, right? Peaking out for the highest level that we've had in quite
12
some
months,
time.
right? 12-month high.
And here's the difficulty thing. I actually agreed with what you said so much there because okay, I would typically agree with you in the sense that that's a contrarian bullish signal. But with markets at all-time high, it's like, I take that with a grain of salt. Well, this is why I like looking at, when I look at sentiment, looking at across the board sentiment too. Put to call ratio, really interesting chart here as well. Shows something a little different. Put to call ratio, people cannot stop buying calls right now. When this chart goes very, very low, for the audience who's new to this topic of put to call ratio, that's just the options market volume of puts versus calls. Specifically, we're looking at S&P call and put volume. Well, call volume is off the chart, right? It is really, really high. People are very bullish in the options market. So I think that what we can take away from that is, markets at all-time highs, put to call ratios telling you that people are very optimistic in what they're actually doing. The sentiment survey is a sentiment survey, right? It is a survey. So I almost take the put to call ratio a little bit more seriously because this is actions. Sentiment survey is people, kind of in their sentiment about it. And like, if you ask me how I'm feeling, it's different than what I'm doing, right? So very interesting to think about that. I would say that people are very, very bullish on the market. The sentiment survey is still worth considering and looking at. But I would agree with you. It's probably more interesting when the market is actually selling off, like a confirmed kind of down move into bearish sentiment peaking. I'm going to start writing puts and buying stuff I like. But right now, I can't really justify doing that. And I just think that there's too many things. Market expectations are very high. You had hot inflation on the market, ripped last week. It's not making sense to me. So I'm just going to wait. Like, there's nothing wrong with just saying, I can't. I'm not a buyer here, and that's not going to fit in with my plan here. I'm going to wait for the right setup.
Yeah, and that's probably going to be most of my year, to be honest. Like, I'm still going to keep that 40 to 45% cash at the ready. I mean, there's a couple stocks that I'd be pretty interested in. Tesla, for one, we've had a pretty decent correction. I mean, we're down 33% from high to low here. It's obviously off those lows slightly. I think Tesla has a good opportunity to kind of show some accumulation and basing around this like low 300s, maybe like if it's not done yet, maybe a Tesla gets to like 275. 275 to me is like a no-brainer level. I got a bunch of ratio spreads where I'd be willing to take some ownership. But if we start to kind of V bottom on Tesla and all of a sudden we're coming back to the highs again, well, then there's a ton of money to be made there in Tesla. I'm riding out some of these China stocks. So like Alibaba and Baidu, if those run, You know, how long am I riding those stocks? I don't know, dude. I mean, if they're the way they're ripping right now, I mean, Alibaba, it's like owning this thing in the basically the high 80s right now,
Yep.
with nothing. Like, I haven't sold a single covered call on Alibaba, and I'm super happy,
I'm
obviously.
jealous. That's the
Yeah, right.
perfect play.
And that's why with Baidu, I'm like, well, I pretty much capped my upside on Baidu for right now.
Sure.
Although I technically like this stock more. The difference is that Alibaba's mentioned AI. And that's, to me, like, also one
Well,
of
they're
the
partnering with
dumbest
Apple,
stories.
right?
It's one of the dumbest stories in 2025, which is all of the earnings transcripts. There is a huge increase in who is mentioning AI to sound relevant, and whether it's true or not, we're about to find out. But that's where money is going right now. It's like everything AI. It's like, again, this could be years away, but I hope everyone's willing to acknowledge that AI is not going to offer more jobs. AI is going to offer jobs of people that can manage AI. But if AI is this big shift, there's going to be displaced workers, probably like we've never seen before, and it might be years away, right? But it's coming, and this is another like weird pain point for, you know, later on down the road. Maybe it's a couple of years from now. Maybe this pain that the economy might ultimately feel is because Wall Street is representing corporate profits that are at all-time highs, and Main Street that is just absolutely getting killed by people can't find work. People won't return to office. I mean, you see what's happening. Like, people are like DC is having layoffs right now. Tech is having layoffs right now, and tech doesn't care. Like, these are probably tech jobs that might never come back, because
Sure.
once they start laying off, it's like they're not going to expand. Why would they expand when they can go AI? Why would they expand when they can do more with less? So I just feel like we could have this really interesting kind of bifurcation of, like, Wall Street is just everything is great and corporate profits are as high as ever, which is obviously a good thing to be an investor in. But Main Street would be jobs are, you know, steady now until they start to crack, and people are struggling, inflation's running hot, life is more expensive, and I could see a Main Street recession that gets pretty painful. You stretch the consumer too thin. You know, if people are tapping into household equity and having to borrow at 6, 7, 8% to finance basically a HELOC on their home or some type of home equity line of credit, it's like that to me is really scary, because you have so much household equity, but if you have to use that and leverage it, that's a really tough thing, because at some point I feel like that ends badly.
Yep.
So
Yeah.
I mean, that's the thing, is like, timing wise, that could be years away. So I don't know, man. And this whole thing on Department of Government efficiency, um, you know, they're trying to smoke out the government. They're going to fire a ton of people in DC. Okay, fine. That's a campaign promise, but it's like, if we start to snowball into, well, now there's more layoffs elsewhere. I don't know, man. I'm just cautious, right? Cautiously bullish. I'm going to be patient. I'll probably continue to take the same, like, lame index related trades, but just be really creative on my option strategies. But it's been enough to, you know, come out swinging with, I think last week I hit a fresh high in my portfolio. It's up like percentage wise, it's like, I don't know, close to 6% for the year, something like that.
That's
I was
great.
at 177 out of 2.4. Oops, fudge. Yeah, about 7% for the year.
That's
That wasn't
great.
bad. That's not bad for a month and a half. You know, S&P's up 4%, sitting at these highs. Are we going to sustain these highs? Yes, no, maybe. Look, man, I think the dumbest thing would be to call the top. This market can totally test the highs and still go above them. We've got enough momentum. We've got enough enthusiasm. We got enough optimism, but it's hard not to see some of the contrarian side of it. You know,
Yep.
everybody's bullish, and these percentiles are so extreme. And it's like, but why? Like, why would it drop? I don't know. That's the thing I'm missing right now, is like, why?
Yeah.
DeepSeek wasn't enough. Tariffs wasn't enough. Hot inflation wasn't enough. It's like, so this market doesn't care right now. And
Yeah.
until it does, until price reflects that it does, then we'll attach a Y to it. But until then, it's like, this market doesn't care until price suggests that it's actually responding to something, you know, negatively.
Yeah. No, I mean, I'm in the same boat. It's not something I can really get bearish on, but also I can't justify chasing it too aggressively. I'm looking for creative ways to get more involved. But specifically, you know, for me, I'm planning on writing a lot of out of the money puts and, basically waiting for dips. And I'm also trading other things. I'm long silver right now. So I've got like other ideas that are at play in the meantime until we get something larger to work with on the indices. Chris, I'm gonna back out, give you a little time. I got to run, but thanks for coming on. Thanks for taking over the stream, and I'll give you some time just to hang out with the audience. Everybody in the audience, make sure if you're not already subscribed to Chris Pulver on YouTube, make sure to go find him on his own YouTube channel. And for those of you guys who are VIP members with us already, if you haven't picked up Pulver alerts, you can also see the trades that he's sharing inside of our Discord server. If you have questions about that, you can speak directly to our support team on our website, a1trading.com. We'll drop a link for that if you have any questions about getting access to the Pulver alerts. Okay, Chris, nice chatting with you. I'm gonna hop out and give you the show.
All right. Thanks, Dick.
See you, man.
See you, dude. All right. Let's go another 13 minutes or so. Just kind of getting prepped for the week. I do have some earnings that I wanted to take a peek at. So that's just other stuff. That's where I'm at. So youtube.com/Chris Pulver. That's my channel, my Discord channel and stuff like that. But I'm here almost every day with the A1 Trading team. Earnings wise this week, I've got some notables. I've got some companies I want to take a look at. So Baidu and Baba have earnings this week. That's two coming out of China. That's already had a great run to start out this year. Toll Brothers, I want to kind of get a pulse of the market on home builders. So Toll Brothers, Lennar, DR Horton, Pulte, things, stocks of those nature to see. Right now, it's like we're still in this like supply side catch up for homes. But that's another thing I'm curious on, like for 2025 is like what the housing market's going to do. I don't see a bunch of other notables. There's some. I have a list in here that I could also share. I think I'm looking at I think there's 400 and some companies reporting earnings this week, and I have it whittled down to about 20 that I'm interested in looking at, and then maybe 3 to 5 that I consider trading for this week. But Etsy, Garmin, Carvana has been a ridiculous stock. I've sold 2 cars through Carvana. I bought a couple cars through Carvana. I thought the concept was great. I know that they were amassing inventory like crazy. They somehow survived everything that happened through COVID with just like the price of cars and everything dropping. I thought, man, Carvana's toast. But they're not. They've survived, and they've had a great performing stock the last year and a half or so, to the point where now it looks ridiculous. It looks like a Palantir. But anyway, so we've got some stocks this week that will be interesting. That is about it. Like notable wise, we're through Mag 7. I think the big one next week is going to be Nvidia. Nvidia next week is probably going to be hailed as one of the more important earnings to watch. I don't know why I have a vertical line on this chart, but I can get rid of that now. But as I mentioned, the drop in Nvidia was good timing to come back to this 200 moving average. We are filling the gap prior to earnings, so I'm going to be out of this trade. I was long with a 126 by 130 bull call spread, as well as a 126 or 126 by 132. So I closed this off for profit last week. I should have just waited until Tuesday. That would have been a little bit more time working in my favor, but it's fine. I took like a 35 and 40% profit respectively on those positions. But Nvidia coming into earnings, are we going to have Nvidia lift the entire market because of positive earnings, or is something going to be amiss? I will say that if Nvidia has anything that causes some skepticism in the market at all, a move down on Nvidia is going to be. Actually, I saw this like CPI last week was supposed to be like about a plus or minus 4%. Impact of the overall indexes, or like the S&P and the Nasdaq. Nvidia is like 6%. There's a huge swing up in the air with whether or not Nvidia can be positive or negative for the markets. It's like stock number 2. I think Apple's still number 1 market cap. Nvidia is number 2. Microsoft is still number 3. So that's coming up on the 26th, which is going to be next Wednesday. So certainly something to watch. This week might be a little bit lackluster. I looked at some of the numbers. I saw the last, the last 15 plus earnings or more. We've had like 10 positive or 10 prints that at least get to the expected move, 7 that don't. So it's slightly in favor of at least gets the expected move over like a 13-day window. But the expected move could be, do we get to the highs? Do we have a $15 move to the upside? Do we have a revisit back down to these 120 to 115 lows? I don't know. It's just like with anything else, right in the middle. So could it go up? Sure. Could it go down? Sure. I don't know what's going to happen. I don't know the earnings going to print. You would imagine that earnings would be positive, just because this is a company that has just had crazy amounts of margin, has pretty much been nothing but earnings momentum for the last couple of years, as it rose to like literally becoming number one stock in the world. Right now it's number two, but a lot of volatility, and also on the peripheral, a lot of leverage. This is the one thing that also leads me to believe that we're going to have a lot of volatility this year, because every major asset. Can you trade like a Tesla with leverage? Let's see. Somebody tell me. Everybody knows there's got to be other ones like micro. There it is, right there. So you've got TSLW. You've got 1.5 leveraged, 2 times leveraged Tesla. So it's like Nvidia has this, Tesla has this. You probably have this on most of your Mag 7s. Basically, these are all like derivatives of the underlying stock price with leverage, and there's options on these, and there's shares of these, and it's these type of instruments on top of, that are like overlaid with the underlying, that I think you're just going to get a lot of price action volatility. I mean, the fact that this was like one of the single biggest market cap lops. Like $500 billion was gone in a day because of Nvidia's drop on DeepSeek news. That was the largest ever. And we're sitting here at these all-time highs, and it's just like these numbers are just going to get more and more staggering. But yeah, I just think be careful. Everyone asked me like, Chris, you trade this and it's like a double leverage. I'm like, no, I don't. I don't trade the 1.5 to 2 times leverage. Look, Tesla already moves enough in my opinion. Nvidia already moves enough in my opinion. MicroStrategy already moves enough in my opinion. Bitcoin moves enough in my opinion. It's like, that's why I'm saying, if I want to eliminate some of the volatility in my portfolio, I'm going to trade a lot of indexes this year. I'll trade SPY, I'll trade SPX, I'll trade NDX and QQQ. The Dow, I'm going to hold off on Dow. Again, we have a pretty high bar count on the Dow, just like we do the S&P. I'd love to see something like this on the Dow. I'd love to see a range. I know, like I said, we could kind of poke these highs. If we do that with little to no momentum, I could see this offering up. I'm not going to say I'm going to short the Dow, but I'm certainly going to wait to see where can I buy a dip. And maybe I'm wrong. Maybe this goes higher and higher and higher, and I'm just looking like, well, I guess I'm not going to chase it. But I'd rather look to see, can we have a reason to fall back into some of these moving average, to fall back into some really good support, to find, what I have historically used for a long time, which is a bar count. When the market stays X amount of percentage away for a long time, and it stays X amount of days away for a long time, I tend to take notice of that. And Meta's in that environment too. Meta's like 500 plus bars away. Nvidia was that stock earlier. Netflix is in the 300 plus bar count camp. I'm sure there's a lot of stocks at the 300 bar count camp. So anyway, actually, you know what? That might be one filter I want to build out. I got a guy. I might be taking a look at that for him or with him. Anyway, Russell, I like the fact that Russell's been sitting right around the 200 moving average. I have some income trades in here. So March and May. The reason I'm not trading the Russell a little bit heavier is because I kind of like the top 200. I want to take like the cream of the crop of, top 200 growth Russell, top 200 value Russell, because about 70% of stocks in the Russell right now don't make money. And that to me is a big concern with higher interest rates. Now, that being said, yes, we could have the 10-year yield following suit. If the dollar settles into that like 106 or 105.50 area, then the bond yields might continue to go down a little bit further, which I'm sure would be great. I also don't think there's going to be a bunch of direction. I could see bond yields not necessarily going below low 4s, but not really going above 4.8. So if we get this in the yields market, it's going to be higher for longer. That's going to be a sticky inflation. I don't see how things go like pure deflationary. I just don't see it. If we're going pure deflationary, I feel like there's going to be a lot of job losses along the way. And that's another thing we're not quite seeing. Like, jobs have been steady, non-farms have been steady. The whole thing I talked about with like AI, replacing jobs and taking away jobs. that displacement could be years away. I think that would be the Fed backstop that doesn't work. If you have such a severe Main Street recession, I think that the backstop from the Fed wouldn't work. I don't care if the Fed cut to 2% again. Interest rates, we're at 4.25. They cut all the way down to 2%. I don't think it's going to help if we're in a, what seems like a jobs market that's never going to look the same. That's scary. Like that's scary to think about that. So I'm not dwelling on it. I mean, the good thing is I trade the markets, so I don't feel like AI is coming for my job. Granted, like analysis, I think that there are, Wall Street macro analysts that will lose positions because they can be done by algos and AI, and that's great. I mean, not that I want people to lose their jobs, but the fact you can comb for so much information in such a short amount of time. It's just who has a skill set to utilize that information to be more of an effective analyst, you know. Um, but it's like they're all going to tell you the same thing. If they're combing the data for the same thing, that's what's going to be interesting. Is like think about the contrarian signal you get when AI says the same thing, right? I don't know. Call me, I don't know, pay me a skeptic, I guess. So anyway, that's it. I mean, rates are down slightly. We had this crazy high peak on mortgages, 7.8. That's really painful. Higher for longer. Maybe we have like a sticky mortgage between maybe 6 and 7% is going to be the new normal. Basically, the housing market is frozen right now. Not a lot of people are moving unless they have to. They're forced to, or they're downsizing. Most people are selling at the highs, which is okay. I feel like you missed out though. If you're selling your house now, they're sitting on the market longer. That's not a good thing. Futures wise, a lot of stuff I'm looking at futures. I mean, corn is coming off the lows. Soybeans still potentially settling in. Wheat, I'd love to see wheat starting to move off the lows as well. Commodity prices. Let me see what the Bloomberg commodity. So we've got the Bloomberg Commodity Futures Index. You can see just over these last couple of months, some sideways movement, right? So this is another thing just to keep a close eye on. I mean, if this starts to get stickier and rising, it's probably not a good thing. I just don't know, how much of this is reflecting what we see in CPI, what we see in, higher inflation readings, or is it just like, well, commodities as a whole are doing better? What I will say is if commodities are making a run, then we're talking about this entire rotation from tech into probably value plays. This would be more the energy play. This would be basic materials, utilities. That is one very likely scenario, which is, look, the S&P as a whole is valued at some of the highest levels we've seen since like topping out the market, and a rotation away from the what is high valuations and perceivably overpriced or overvalued. You start to see that rotation into other things. But what could keep 2025 going? 2025 going could be because the U.S. has done so well that now everyone else is catching up, right? I mean, I don't know if anyone notices, we talked about this late last year. The U.S. has outperformed essentially the world by like 3 standard deviations over the last, I don't know, let's say 5 or 10 years. So it's not a huge surprise that out of the gates this year, yes, we're up 4% in the S&P, yippee skippy, but Nasdaq is creeping up towards all-time highs still, like single-digit performance. But German DAX, UK FTSE, Argentina had a great year last year. It's pretty sideways. China's had a big recovery. Japan, like I said, is pretty sideways still. But like India's had a great run. Europe's had mostly a great recovery. Even looking at like Italy on its own, like the Italian 40's done pretty well. Greece has actually done okay, which Greece was like the crappiest country to invest in a decade ago. That was part of the reason they're like, oh, the European bloc is going to dismantle because Germany can't support Greece and Spain and Portugal and Italy. Anyway, that was a long time ago under Mario Draghi. So point is, I just don't think there's a one-dimensional trade this year. I think if you're following one thing, good luck. I'd love to say that NVIDIA is going to be a stock that can continue to produce good gains. I think NVIDIA is really, really vulnerable to a lot of noise. Look, if anything threatens NVIDIA and it's number 2 market cap, NVIDIA is going to it's going to be a catalyst for a lot of pain in the markets if NVIDIA drops. And I'll just say, let's say hypothetically that NVIDIA rolls over on itself, right? Let's say NVIDIA for whatever reason just can't break these highs, and all of a sudden NVIDIA breaks this like rising wedge pattern. I would not want to be in NVIDIA calling, where's the bottom, where's the bottom, where's the bottom, because this thing could go and give back all of it. That'd be my biggest concern. And if we have number 2 in the market cap that's going to drop 70, 80%, there's going to be an incredible amount of pain in the markets to have that happen, right? Now, that's why if NVIDIA dropped 70%, would the S&P go with it? Well, of course, we'd have some pain in the S&P, but having 500 stocks or having equal weighted S&P is a little bit different way of playing than just being all in on one stock, you know? So 2 things I think would help this year would be to see if we want to see and this is another reason Nick came on and was asking about indexes. We're sitting here at all-time highs. Here's another reason to see, are we truly going to see a sustainable run? Okay, this is equal weighted S&P. Are we at all-time highs in equal weighted S&P? Not even close, right? Not even close. And so if equal weighted S&P is going sideways or going down, I know the S&P can go higher, right? Because it's led by Mag 7. But if Mag 7 is going sideways, so like something's going to break. And it's either, yes, if Mag 7 picks up some momentum and starts to get back up here again, flows come back in, okay, fine. Mag 7 leads the way, maybe the broader market comes back. But my concern is that Mag 7 continues to be underperforming. And you look at equal weighted, also lackluster performance. And the same thing is true on, well, all right. That was a pretty good, okay. I was going to say S&P equal weight is lagging, but look at the Nasdaq. We clearly have some market interested in Nasdaq. QQQ dragging up to all-time highs. QQQE actually poked all-time highs. Actually, the equal weighted Nasdaq outperformed. Speaking of that, I do have a position here. I mean, it's not a big move, but I mean, I own this thing at $90. It's up 97. It's fine. Anyway, all right. So equal weight. Are we going to have a broader market lift, or is it going to be Mag 7? Is NVIDIA going to step up and drag Mag 7 higher? Maybe it does, maybe it doesn't. So I don't know. We're just going to have a lot of like, this is moving, this isn't. This is up, this is down. I can see that being a really, really difficult year to be a stock picker. It'd be good if you're right, and it could be terrible and underperforming if you're wrong. But that's also why one of my favorite trades is staying out of the way, letting the market grind and chop around. Maybe we don't have a lot of direction, but if I can still produce, a couple percent a month, I'm really happy with that. And I can take on a lot less risk. I can still be braced for some type of downside shenanigans. And hopefully 2025 at the end of the year is like, it just felt like a good trading year where even the market did a bunch of stupid stuff, I still made money, but I think that the overall, like, everything's bull market, everything's easy. I would like to think that 2025 is not going to be that easy. So, I mean, if I'm wrong, then cool. Everyone makes money in 2025. But something tells me that a trading year is probably what I expect. All right. That being said, I think I'll wrap it up here. We're closed. Markets are closed. It's cool. I got another class coming up in a few minutes. The plan for this week, I will be pricing out some earnings plays, taking a look at these with some of the more highly impacted news events. And also this week, let me check just the other fundamentals. So let's go to the calendar. Anything else that stands out for this week? RBA is expected to be cutting rates. I think New Zealand's expected to be cutting rates. We got CPI out of Canada. Yep. So looking at a 50 basis points cut out of New Zealand, a 25 basis points cut out of RBA. This also would lead me to my Aussie New Zealand position, which is still long. So I'm still long on this is Aussie New Zealand currency. I'm looking to see if that cash rate differential gives the Aussie the upper hand, and I'm starting to take this up towards. I'm going to see if this gets up to like 13, 1400. I think 14 to 1500 probably takes a profit. This goes back into the highs in 2022.
This window to me would be pretty good. I'd love to see this trade actually. So we're going a little bit higher, a little bit higher. If we start to break these highs, I'd like to see a nice little trend to this 114, 115, gets a little overextended, and then hopefully it lines up for a really nice short. So maybe something in the currency market that gets me excited for the first time in a while. What else this week for news? CAD CPI. There is your, everything out of New Zealand cutting 50 basis points. U.S. news, meeting minutes on Wednesday at 2 p.m. Okay, fine. Just again, meeting minutes, Fed's pretty much going to say the same message. We had a 2-day testimony from Powell last week. Market didn't really move on his words. Anything else? Unemployment claims. Friday the 21st. Anything here? U.S. Manufacturing services PMI. That will matter a little bit. That'll matter. Got a lot of PMI data on Friday. Okay. So we'll see. Could be path of least resistance. I don't see the market being crazy disrupted this week, honestly. News-wise, it's just like more of the same. So maybe NVIDIA means that much, where the market's kind of hinging on a positive print for NVIDIA, or at least price action to support NVIDIA. And if we blow through the highs, we blow through the highs. This is one trade that I did end up taking last week. So I've got on this chart here, MES. So I did a micro E-mini futures. So this is MES. I'm risking about $990 on the trade. It looks something like this. I have on the bullish side and the bearish side. So that's my dead zone. That's my risk. This is what my option risk graph looks like. So I'm risking about $990 right here. I've got about $1,500 of profit on the put side and about $750 of profit on the call side. So it's just shy of a 1-to-1 on the call side. So if price goes higher, I can still make some money. If price goes lower and goes after my 200 moving average, then I'm going after a bit more profit and some reward to risk that's greater. But I'm doing this out to April. So I think if we go all the way through this month and through March and through April, whether this market is ripping higher or having some type of volatility event to the downside, I'm hoping to take advantage of that in some way, shape, or form. On that note, I'll end today with VIX. Which is at 14.78. This isn't a position I'd say I want to get long VIX, but it's not a position I'm going to say there's no reason to short VIX. I think the issue that I'm having right now is that with this recent decline in the VIX, premium selling has been a little bit tougher. Unless you're selling IV, like high IV stocks that are, having earnings, that's pretty much it. Like the major IV catalyst has been earnings. So I want to stay away from stocks that look like, here's an interesting sign. Cathie Wood. Like literally everybody hates Cathie Wood and hates Jim Cramer, and they created like inverse algorithms to trade the opposite of what they call. But ARK with disruptive technology is actually starting to turn the corner a little bit. So Cathie Wood still has a job. That's good. But I just think that off these lows at 36, we came off these lows. This is May of 2022 all the way to, August of last year. But that was a pretty strong bottom. And now this, again, we're way off from these crazy all-time highs, but at least it's showing some signs of like, well, it's not beat up to 35 anymore. So I just thought that was interesting. It shows me that there's some money that's trying to be thrown around. It's not just Mag 7. I think that's the one thing that was pretty obvious this year is like Mag 7 money is going elsewhere. I think U.S. money is going elsewhere. Like value has been seen in foreign markets, and value has been seen in other things like non-Mag 7 stocks. So energy, I still think is going to be interesting. I don't really have a big plan on oil this year, as much as I want to just say that oil support is in at 60 and change. Like $65 to $66 oil. It's like, that's our support level. Maybe it is until it breaks. That's my concern is like, I think something, I don't know, man. Maybe this year is like wild and crazy and something breaks, or maybe this year is just super boring and we just have a bunch of ranges, right? So I know how to trade ranges. I've got cash at the ready for any type of something that breaks. So I think that's giving me it's helping me cast a wide net. It's helping me get a lot of like flexibility in my trading strategy and have a lot of resilience in my portfolio. So,
Again, I'll carve out whatever I can. If my year this year is 20, 30, 40%, cool. I'll see how I get there. But it's certainly not going to be chasing. That's one thing I'm refusing to do. It's like, I think there's opportunities this year that will reward being patient. And if it's not, then it's not. But patience at some point will probably win out. But I think the surprise this year is going to be the why. Like, why did that happen? Who knows? It could be Trump. It could be Elon Musk. It could be China, US. It could be tech. It could be tariffs. It could be the Fed. It could be a lot of things. It could be something I'm not even thinking about right now that I've never even heard of right now. But I think the market's going to latch on to a lot of things noise wise. I think news is going to be very noisy this year. If you're not ready for that, then you haven't been paying attention for the last 6 weeks. We're going to have lots of headlines, and the market's going to cling on to it like it means something. And the price action in the market is ultimately going to be your best barometer for whether things are really bearish. Here's a good example. This right here, okay, during tariffs, during DeepSeek, did this really make a big adjustment? This was the 18th of December. The last time this is your basically your high yield bond ETF. So to me, what this represents is if we see that the markets are selling off, if the markets are selling off and this is down, I'm not that excited about buying the dip. Okay. But if the markets are selling off and this is still like really, really tight price action, probably buy the dip. But we have some of the tightest credit spreads right now between like AAA, BBB, CCC, some of the tightest credit spreads we've seen since before the Great Financial Crisis in 2007. Is it like a sign of bearishness? No, it just means like right now, nothing in the system is showing illiquid. Nothing in the system in financial markets is showing that they're scared. I think the optimism is still there. So despite this AAII sentiment survey, I think the optimism is almost too high, in my opinion. But it's not a contrarian. I mean, I think there's plenty of room for stock market to have stock buybacks, mergers and acquisitions, cash goes into the system, household equity. It's like there's still money like getting pumped into the system. But like I said, if we have like a nasty correction in the markets and this thing is down and breaking fresh lows, then I might expect more downside pain. But until then, we'll see. We'll see where like institutions position for buying puts and how much they're going to be protecting, how much this move might mean something. So stay patient or be stupid and be aggressive. Buy Bitcoin, buy double levers, everything, and blow up your account. Choice is yours. All right. Happy President's Day. We'll see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.